Okay, it's now recording. So spread trading was great for me, but eventually when reality kicked in, if I wanted to do this for the long term and not have to have a regular job, spread trading was not the way to achieve that goal. Here's why. 2008, the market started dropping. It actually started dropping 2007 into 2008. But the market started a nice, massive downtrend from 2008 right into 2009. Let's say I have 5 spreads on. Each credit spread I'm tying up $5,000 in margin, looking for a 10 to 20% return basically before exiting the position. If I have 5,000 tied up, I'm looking for a 20% return. That means that 80% of that 5,000 is at risk. Okay, so I am still at risk of losing $4,000 in every one of those spread trades, looking for 20% return on the spread. If the market goes against you, you have to make adjustments, meaning you have to put on new positions, roll positions, meaning put more money into a trade gone bad to try to not lose the money you already had tied up in the initial trade. So if I had $5,000 tied up in the initial trade, it might take me another $5,000 to $7,000 or $8,000 to put another trade on as the adjustment to fix the initial trade that's going wrong. Now picture having 5, 6, 7 of these spreads on, and now the market goes against you and you have to make the adjustment. So I made the adjustments, no problem. That meant I have to put a whole lot more money, double to triple the amount of money I initially had tied up into those trades gone bad to fix them. But I knew how to. Knowing how, I got the knowledge. I got to know how to do it, no problem. But what happened in 2008, the market just kept going the wrong way and going the wrong way and going the wrong way. So I had to make adjustments on the adjustments and then make adjustments on the adjustments of the adjustments. Okay. So what ended up happening, instead of capitalizing on trading directionally, the single most biggest directional move in market history down, which continued for months and months and months, a massive downtrend with a nice directional strategy. I was spread trading, looking, and I spent months literally trying to not lose my money, as opposed to spending months capitalizing on this massive downtrend and making money. I had so much money tied up in protecting my spreads. That's all I could do was basically go to work at Lockheed every day, every week, take my paycheck from that week, send it to Options Express to fund my account because I needed more money in the account to fix the trades gone bad. Then the next week, take my paycheck from Lockheed, send it to Options Express once again to put in more corrections to adjust the adjustments. So I spent months just funding my account every couple of weeks to fix trades gone bad. And that is not a way that an average person who wants to trade for a living and not have a regular full-time job can do it effectively. You can't rely on having to go to work to find money from some other magical place to fund the account to fix trades gone bad, putting good money after bad. I knew how to do it. That wasn't a problem. I knew how to do it. But so I had to change my total approach. And what I ended up doing was surrounding myself with people who were directional traders, people who I met at a Traders Expo. Myself and Becky went to the Traders Expo in Las Vegas. We traveled around the country learning from people who were directional traders who traded their own real money, not educational organizations just running a school. People who were trading their own real money, and we learned from them risk management and all the details of how to manage positions. A lot of stuff we did not learn just going through a school. And we did all the school stuff. We spent about probably $30-something thousand on quote unquote educational organizations and schools. But it really wasn't until we found people who were trading their own real money did we really start to advance our knowledge and profitability. So that's how we evolved into pure directional trading, buying calls and puts only. And you can't just go out and buy calls and puts and expect them to be profitable because you have time decay. How far out are you going to buy those calls and puts? Because you don't buy enough time, they're going to expire worthless. You buy too little, if you don't buy enough time, they expire worthless. You buy too much time, they start costing too much money. What's the sweet spot? Well, after hundreds and hundreds of trades over several years of experience trading, we worked that out. We got our sweet spot. We know how much time. We know what the price limits are and how much is too much to pay for an option. And we fine-tuned that to a science, basically, for ETFs. We settled in on this particular group of ETFs because they give us a very diverse group of sectors to trade from, to choose from. And also they have enough open interest for us to do the trades we want to do. Also, option pricing, there's something for everyone. If you have a huge account, then you can trade some of the big boys because options ain't cheap. If you have a smaller account, there are options, ETFs you can trade here with lower price options. If you have a monster account and then you can trade the Qs, you can trade DIA, you can trade GLD. Your smaller account, some of the options are a lot cheaper, but you get the same results. So there's something here for everyone, and that's why we have this group of ETFs that's worked extremely, extremely well for us. I'll show you the listing of trades over the last couple of years. The listing is also on my website. All right, I'm gonna scroll down to the next sheet here. What we're going through today is one of the strategies. It's one we have been doing basically forever, and it is the Ichimoku Senku. All right. Some of you have seen it before. It's pretty straightforward, but it's not straightforward unless someone shows you how to take the Ichimoku cloud and utilize it in a way, because Ichimoku cloud is just a tool. It's just a couple of lines moving averages, just a couple of moving averages. And some equations, it's out there, been out there for decades, but it's just a tool. How do you use the tool? There are hundreds and hundreds of ways to use a tool. We're showing you how we use that tool for this specific strategy. It's one out of a group of strategies, but it's just a tool. It's the Ichimoku cloud isn't some magical thing by itself. You have to, when it's given to you, you have to know what you're going to do with it. And it's usually by having someone show you. They'll tell you, well, if it's above here, if it's the price up here is bullish, market's bullish. If the price goes down here below the cloud, the market's bearish. Of course, that totally makes sense. That's literally the definition of the cloud. If it's trading above the cloud, market's going up. If it's trading below the cloud, the market's going down. And people think, well, I have a system here. No, that's not a system. That's just telling you the obvious. Okay. So now I've been asked before we get into this to just go over what the market's doing right now, the overall market. So I'm going to switch to the charts, and then I'll go over a little quick overview of the current markets, and then we'll get into the Ichimoku right after that. So I'm going to switch my share to the chart. You should be seeing my Thinkorswim chart right now of the S&P 500. This is a monthly chart. I was asked to show this because people start freaking out over what they see on the news or when they're looking at what's happening today. This is the S&P in a massive, massive, massive uptrend. This is a monthly chart. When you hear people on TV, they try to scare you. For whatever reason, people on TV try to scare you and panic people. The market's falling, the sky's falling, the sky's falling. The market's done nothing, okay? The market has really done nothing. Had a couple of down days, and they try to freak you out, okay? This is the S&P 500 since, I'm gonna scroll over. Right here, we're in the bottom of the market in 2009. And this is the market since 2009. The green line is an 8-period moving average. Purple line, 21-period moving average is a 40-period moving average. Some of our foundation is in an 821 crossover. When we're in an 821 crossover, going back to Hubert Centers and John Carter, 821 crossover, bullish market. We've been in an 821 crossover all the way since 2010 in the S&P 500 monthly chart. It's never had any, it's never crossed down. If it crosses down, then we know it's going down, but it just has every couple of months or years, it'll pull back to the 21-period moving average. Okay, so here we are, the bottom of the market in 2009, and then it took off, bullish cross up, and it stayed bullish. Here we are in 2014, 2015. Pull back to the 21-period moving average, stayed below for 1 month and closed back above. Closed below the 21-period moving average, touched the 40, uptrending 40, closed back above, kept going. Every couple of months or years, it'll pull back to 21 and then pull back to the 40. Pull back to the 21, touched the 40, closed back above, kept going. Pull back to 21, hit the 40, closed back above the next month. If we had 2 closes below the 40, well, we'd probably be going lower. But once again, basic technical analysis from different people we've learned. But 2 closes below, you have to be concerned. 1 close below, no big deal. Wait to see what happens. And we approach trading stocks the same way, or trading shares the same way on stocks or ETFs. 1 close below a certain level is irrelevant. You gotta do a little bit more than that, than a single close. And here we are right now. We haven't even pulled back to the 21 yet, but we pulled back close to it, and we're right back above the 8. This is the current market. It's just a massive uptrend, and we haven't come anywhere close to breaking that uptrend. So when you're listening to people freaking out about losing all their 401k, you got to filter all that out. It means nothing. There's just people on TV trying to scare you. Down days happen. It means nothing. People, they don't, as soon as we have another update, they stop talking about it on TV and talk about something else. Okay, so we're just in a massive uptrend that hasn't changed. We get occasional pullbacks for a few days or a week or 2, and then we're back up, moving again, back up above the 8. Massive uptrend still in play until we will eventually have a pullback. It's going to pull back to the uptrending 40, and people's going to freak out again, up then right back up and keep going. So anyway, just wanted to show you that, the big picture point of view of what's going on right now. And the major markets all kind of look the same way. I'll pull up the Dow. Here's DIA to Dow, same thing. Pull up the NASDAQ. Same thing. Major markets, even IWM, Russell. Russell 2000, same thing. And as we get into the summer months, markets tend, the old selling may go away. It wouldn't be unlikely to see the market sort of chop sideways for a while, but still a massive uptrend. So nothing has really changed that influences how we approach the markets from the big picture point of view. Someone just made a comment, and can I suggest OIH as another good option for oil ETF? We do XOP and USO. So for oil, it's XOP, and USO is what we do for oil. OIH used to exist on our list of ETFs. What, for the person who just made the comment about OIH, what does a call option, an at-the-money call option 2 months out cost? Do you know? An at-the-money call option for OIH, what is 2 months out, what does it cost? That would be, let's say, a June option. What does a June at-the-money OIH option cost, call option? If you can look that up, person who just put that up there, or anyone else. OIH at-the-money call option, and what's the open interest like? This used to be on our list. It fell off when the holders changed. If anyone, OIH call option, June expiration, at the money option, what does it cost? Anyone out there on an option chain? $26, 24, 26. And that is the reason we don't do it, because that's $2,600 for one call option. And most of the people on this meetup right now can't do that. Can't just go buy one call option for $2,600. Think about it. We risk 2% of the account on any one trade. 2% of the account. That's would require a hundred and something, like a $300,000 account just to basically buy one contract, or $200,000 account and to buy one contract, if it only to represent 2% of the account. That's another reason OIH is on this, too expensive. So we just buy calls and puts. So if you have $100,000 account, the max we should be spending on one position, on one whole position, is about 2% of the account, which is $2,000. So that would be, and for most of the people I work with, and for most people in general, that's too expensive to buy one call option. If you're doing something with spreads, great, but just to buy a call option for most people is too expensive. And we recommend buying at least 2 or more contracts so that you can actually trail the stop. So you're looking at a $5,000 position, which would represent 2% of the account. So you're looking at a $300,000 account minimum to even buy 2 contracts. So that's why you don't do that.
Really quick, on these options, what the delta normally you go for? Do you have, like you said, 2.5% on the overall portfolio?
Yep.
On one position, do you also have some recommendation for the delta? In order to buy
2% of the account, 2% account risk. So if you have a $100,000 account, 2% is $2,000. That might be 4 options that cost $500 each. That might be 8 options that cost $250 each. That's max. And you don't go for max until you actually know what you're doing. You should trade a smaller size position, but 2% of the account risk per trade. And you can't screw yourself up much with that and everything we do is 84% wins or higher. Since that is what we've always done, and realistically we have 85 to 87% winning trades. So it just becomes a math thing. Since we're just buying calls and puts, we do not know what the outcome is going to be because of time decay and volatility. We know that on average, a winning trade will be anywhere from 3% return to a 30 to 40% return, just at the first profit objective. And your goal is to average at least 25% return on winning trades, 25 plus. So as long as you're maintaining an 80-something% win rate, you're going to make money. Depending on how you want to manage positions, you make a lot more money. I'm going to switch charts now and get to Ichimoku. So I'll take a look at this particular strategy and go from there. Just to clarify, did I answer your question, or do we need to go over that a little bit more?
No, that answered the question, Evie. I just wanted to know a little bit more about your strategy.
Okay.
You go for 50%, 70%, 80%. What is the normal delta do you normally buy?
It's going to be the first in the money option. There's usually like a 50 to 55 delta. People have asked, why don't we go higher?
Okay.
Well, if you go higher delta, that's all great and good, but now you're buying fewer contracts. So you will make more money with more contracts because you can manage them. But if you go in a higher delta, then you're just basically paying more upfront which means you're going to end up getting fewer contracts. If you have, let's say you allocate $2,000 to buy contracts per trade because it's 2% of the account, then you can either buy 4 contracts costing $500 each, or you can buy 3 contracts costing 6 something. I would rather have 4 contracts with a 55 delta than have 3 contracts with a 60 something delta, because once the position starts moving, you're already in the money right off the bat once it start going your way. And I'd rather have more contracts in play to be more profitable and to be able to trail stops and squeeze more juice out of those open contracts. So the first strike in the money is usually about a 53 to 55 delta. That's what we always go with. Never out of the money, never out of the money, and never out of the money. Always right pennies from at the money or in the first strike in the money. If you go out of the money, then you have to assume you will not make a single penny until you're in the money. You just have to assume it right off the bat. You will not make a penny, because the worst thing you can do is have the trade hit your first target and it's made nothing, because you are out of the money options don't make you, you have to assume it won't make you any money. You got to be in the money. So let's take a look at this strategy and just over a little bit. Okay. Let's go through the Ichimoku. This is on Thinkorswim, Ichimoku cloud. Let me show you what everything is. This gold colored part of the cloud is the bullish Kumo. Kumo is the cloud. The red is the bearish Kumo. This top line where I have the purple edge is Senku span A. That's the top line of this bullish cloud. Okay, let's actually look at this side. The top line of this bullish cloud is Senku span A. The blue line at the bottom of the cloud, that edge, is Senku span B. When these are moving averages and the equations are very publicly available, any places, Google it for 2 seconds. When this span A, the purple line, crosses below the blue line, span B, we have the bearish cloud. So now this span A is now this lower line on the bearish cloud. When span A crosses back above the blue line, we have the bullish cloud. Okay, very straightforward. The crosses of span A and span B create the bullish and bearish clouds. Okay, now what we're also going to be using for this part of the cloud is the Chiku, this red line. I'm going to go to where it currently is now, so you can understand how that comes about. Okay. The Chiku lags the current price by 26 days. So Friday was the 25th. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. That red line right there, that's the Chiku. All right. And if you take a look at the data box, make sure you can see you don't see the actual value in the data box. Let's see if I can turn that on. Do I have that showing? You don't have it showing. I'm going to see Chiku, show the plot. It should be showing up. Okay. So on this day, oh, that's because it's over here. So that's the Chiku. So what we're looking for, we're going to use the Chiku. And just so you know what that value is, the Chiku this day, if I can get a value for it, I'm saying it's not showing up in the data box. Or is it not? There it is. 359.35. The Chiku value that day, 359.35. If we come over here, the closing price is 359.35. So the closing price of Friday is the Chiku price of 26 days ago. So the Chiku price 26 days ago is 359.35, and that is equal to the closing price of the ETF on Friday. Okay. The Chiku is always 26 days lagging. All right. So let me show you how this strategy works now. I'm going to use a picture perfect example, as you can see clearly. All right. For this example, I'm looking for a bullish cross of the cloud of the span A crossing above span B. If you look at the value in the data box for span A right now, the value is 365.54, 365.54, and it is less than the value for span B. The value of span A is 366.37, and it's less than the value of span B of 366.55. On this day, the value of 369, span A is 369.69, and it's greater than span B, 366.35. This is the day it crossed over. Okay, this is the crossover day. All right, so we're looking for price, a bullish cross of span A crossing above span B. That is visually what we are looking for. Okay, when span A crosses above span B. So then what we would do, we'd be looking for 2 expiration cycles out. So these lines on the TOS chart is expiration Friday. If you take a look at the spreadsheet, all those stats are based on having 2 full expiration cycles worth of time in the option. So there's no question about how much time we want in the option to be. The previous expiration cycle started here. We're in the middle of one. So this doesn't count as 1 expiration cycle. It has to be 2 full expiration cycles. So if the first one is 12/17/21, this is expiration here, but we're starting in the middle, this one doesn't count. The next one is going to be January. And then February. So we'd be looking for a February option at the earliest. So when we see this crossover, and we'll go to the plan a little bit, give you a little more details there, we would be looking to purchase the first in the money option the very next morning at or below the open price of the ETF. So if the next morning the ETF opened, take a look at the data box, opened at 391.31, we'd be looking at buying the 391 call option, assuming there's an option at every strike, and they're a point apart. So I'd be looking for the 391 call option in February at the earliest. Okay. And we do have pricing criteria for that we go over when I'm doing one-on-one coaching. So I'll let you know how much is too expensive. If you pay too much, you're not going to make any money. It ain't going to work out. You have to pay the appropriate price or less, or else you're just going to be tying up capital. Time decay will get you. You pay too much up front, you can't make any money. All right. So I know when I have a trade valid, I have the crossover. Now, one more criteria, I look back 26 days. So here I see the setup, trigger, and trade management. My setup is what I'm visually looking for. I see the 2 lines crossed. Most valid strategies, I'm looking for 2 lines crossing or a hook or change in color. So visually, it's all I'm looking for, 2 lines crossing, easy. And to look at it even a different way. This is the close of the day. Did 2 lines cross? No. Next day, did 2 lines cross? No, nothing to do. Next day, did 2 lines cross? No, nothing to do. Next day, the next day I do my review, end of the day, 2 lines crossed. I have a valid trade setup. That's basically what we're looking for. 2 lines crossing. Once you see 2 lines crossed, then we know we have something to review. Okay, by looking for the 2 lines crossing. So now on this day, I look back 26 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. 26 days ago, I looked for the Chiku to be above the Kuma, or above the cloud. That's my confirming trigger. My setup, what I look for is the bullish cross, span A crossing span B, or the bullish cross of the cloud. And my confirmation is the Chiku has 26 days ago, the Chiku had to have been above the cloud, and it was. So I have a setup, which is the 2 lines crossing, Senku span A crossing above Senku span B. My trigger is 26 days ago, the Chiku is above the cloud. That's my setup and trigger. And this is terminology I got from Jake Bernstein, setup, trigger, trade management. Okay. Any questions about this right now? Setup, trigger, and trade management. Well, not the trade management yet, but a setup and trigger. Any questions? Again, feel free to unmute and ask a question or type it in. Okay. So once I see I have a setup and trade management, setup and trigger, then I have to go to my stat sheet and make sure it's something I actually want to trade or can trade that's over 84% wins. Otherwise, my time is being wasted. I don't spend my time on anything that's under 84% wins. All right, so I'm going to change my share back to the trading plan sample. And then we'll take a look at that to make sure you can understand what's going on there. Okay, so looking at the trading plan here, is there a link for today's handout? Look in the chat window. Becky just posted it again. To the chat window, you see the link for the handouts. Go to that website and all the spreadsheets and handouts are there, showing all the historical trades also. All right. This is a trimmed down sample trading plan. The actual real trading plan will show you more details for all the settings, for all the indicators, for everything we do. It will have much more. And then for the trade management, when I'm sitting with you, either in person or online going through trade management, that's what takes several hours. Trade management is not 2 sentences. Trade management is me showing you how to do this in detail for a couple hours with different scenarios and situations. So just look at it real quick. Yeah.
I actually had a question before you move on.
Yeah.
So the IC cloud or the IC technicals. So yeah. How would you set up your exit position, even if you're looking for the bullish cross, especially in a market like the current market situation with the Ukrainian war and whatnot? Because obviously we've seen any bad news could obviously turn the market sour, especially if, let's just say, Putin goes forth with a chemical war or whatnot. How would you set up your exit position? Would you still be looking for max gains, or is there anything that you would look for on the IC technicals to where you would sort of look for that median or still go for that top?
Okay, we'll go through that in a second for the trade management. First thing you should understand is that who cares what's going on in the world? Okay, the chart doesn't care what's going on in the world. Whatever's going on in the world, whether real, imagined, whatever it might be, generated that buy signal. Whatever is real or imagined going on in the world will generate sell signals. When we get a buy signal, it's not up to us to arbitrarily make up in our own mind what one thing happening in the world is going to do anywhere in any way, shape, or form. We have some of the most bullish markets ever with a war going on. There are hundreds of economic events, announcements going on around this country and every country, every day, every week, every month, affecting everything. The war is one thing, people. What about all the other hundreds of things? So we don't pretend we know what is going to happen because of a news event. When whatever's causing something to move in the market will generate a buy signal that fits into our criteria. Whatever's happening in the world will generate a sell signal. When we get a buy signal, we verify it will give us over 84% probability that this market is going to move in our direction within a given amount of time, within a certain percentage probability of success. That's it. So it doesn't matter what's happening in the world because that's meaningless to us. This is pure 100% objective technical trading. Looking at the news and what you think might happen is nice for conversation, has no impact in our decision making in any way, shape, or form. That's why this works for us. This is stuff I have to rely on to actually pay my bills every month. And for the last 2 years, this is trading has actually been my only real income. It's actually been the best income because when the markets were going down, we got beautiful sell signals. And when the market is going up, we got our buy signals. So whatever turns the markets up, we'll get our buys. Whatever turns the market down, we'll get our sells. Whatever, if it's caused by war, economic events, FOMC, announcement in other countries, and all the countries are interlinked. We don't operate by ourselves. So we don't care what's going on. It's purely the buy and sell signal. I can go back to anywhere on any chart 20 years ago and show you a buy signal. Does it matter what caused it? Would you even know? The answer is no. I can go back to 1987 market crash and I'll show you all our sell signals that we would have gotten days before the crash happened. And I can show you all the buy signals we get at the bottom of the market in 2008. And it doesn't really matter. It's pure technical.
Right. So even saying that, like I hear you on that, it makes sense. So right now I'm currently looking at QQQ. I trade this a lot. It's one of my favorite ETFs. It's the best. It's the best. Right. Right. I love that. I love the NASDAQ. And I'm actually bullish on the NASDAQ. I've actually, because I trade futures as well. But so if you want to look at the QQQ IC technicals, okay, so the green line,
I will tell you that last week we got buy signals on everything. Last weekend, I'm going to switch over to my Facebook page real quickly here. Just show you what we got last weekend, because it's just been played out. So
yeah, just to get that question. Right now it's still in the cloud, right? It's still in red. Okay. And there's no crossover yet. Right.
That's a daily chart. No, that's a daily chart. So this strategy will get you into markets once there's a major change in trend. Right now, if this goes above, there's a different strategy. If we close above, there's a different strategy we'll have. But this strategy usually makes a major, is about a major change in trend. The Ichimoku strategies, I mean, the Donchian strategies we have, and also the weekly chart strategies we have. Let me show you this, what we did last weekend, just for a second, because you're on, should be seeing our Facebook page, group page right now. Show what we got last weekend. What was that date? So you can get a feel for what we're doing. And what, here it is. This is what we got last weekend. These are all buy signals. This off weekly charts. And this is an Ichimoku strategy, but off a weekly Ichimoku strategy. One of our absolute best weekly Ichimoku strategies, by the way, because it marks this strategy. We did this for shares and also we have it for options, marks a bottom that's turning up. Off a weekly chart, this strategy marks a market bottom following a pullback. So if you picture a market pullback, and if the pullback lasted maybe a couple of weeks and then turns up for another swing upwards, that is what this strategy identifies. And this is what we got last weekend, all these different major markets, buy signals, okay? For the people trading them, they had a really, 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 really good week, okay? So, and we got a few more here. These are all option trades. The Qs being an option long trade this past week. So between our daily chart strategies and our weekly chart strategies, we get signals at the appropriate time. So we don't just rely on one strategy to tell us, okay, this is our time to buy this. We rely on a group of strategies that will give us buy signals at the very bottom of a market pullback. It will give us buy signals after a trend upward has initiated. And we have buy strategies that will give us signals after the trend has been well established and now is in a continuation mode. The similar thing with our sell strategies. We have one sell strategy that will get us in at the absolute very top of every market. And then we have another one that will get us in after the move has started downward and the market is starting to trend down, and another one that will get us in at a later time. So that's how our strategies are all stacked up. So we don't just trade one strategy. So last weekend, this is what I posted on our page. We got buys on everything. You won't see that with this particular Ichimoku strategy because it's not the strategy that gives us market bottoms. It will give us buy signals, but not after this pullback. We will get another buy signal if it gets above the cloud. We'll get another buy signal, maybe. Or we have one of the other strategies that would be appropriate for it, but we don't rely on one strategy for everything. So right now, this strategy would not help us on the Qs at all, okay? But looking at what we did last week, so that's why we have multiple strategies going on. So we always have something to trade to capitalize on market moves. But yes, it is long right now and it's long everything. And it doesn't matter about what's going on in the world. We have a long signals. Usually when you hear on TV and radio, they're talking about your 401k is gonna go to hell and all this stuff and panic and stuff. It's like, and I'm looking at, we just getting new buy signals and they're trying to panic people. You ignore all that stuff, ignore all that. Even turn the news off, focusing on charts. The charts will tell you what's really going on, not the people in the news and stuff like that. That's why we trade objectively, because then if you were day trading and want to trade news events, great, but not for this. This is swing trading. This is the stuff you evolve to, where you filter out all that stuff. And we have a couple of people in the group who only trade the weekly stuff, and because they don't have time to be doing this every day, they just trade the weekly strategy. So they'll buy shares or they'll buy options, and that's it. And they just write it up. But we have multiple trades going on right now. I know I'm in a couple of these trades, including XLB. I know I'm in XLB right now. I am in IYR, and I know I'm in something else right now with options, and waiting for the next futures trade. Some people are long the futures still. I'm going to switch back to the plan, but that's how we see the markets, not just one chart or one strategy, but multiple. So on this Ichimoku strategy, there might be nothing giving us a buy signal right now, but if we look at a different strategy, we'll totally see the buy signal. So that's why we trade multiple strategies to do that. And how we know what to trade, the stats, the magical stats. This is a win-loss history we maintain, we meaning Becky. If you see something written in little rectangles with numbers in them, it's done by Becky. I do not put numbers in boxes. I absolutely do not do that. I absolutely hate spreadsheeting. Becky absolutely loves spreadsheeting and managing data. That's what she's done. That's what she does for a living. Information manager, database manager. So she tracks all the trades in history. That's how we know what to trade and what to not trade. Just because you see two lines cross in a chart doesn't mean you go take the trade. That would be absurd. What's the probability that it's going to move a certain amount in a given amount of time without just guessing? If you just guess, that's why so many people lose all their money guessing. They'll make a lot of money and then they'll lose it all, but there's no consistency. So everything we do is in a business-like manner, total business-like manner. Show me the numbers, show me how I'm going to make money. What did you mean by 5 years? What was that question? You got a comment in here, MM. 5 years.
Yeah, no, I was responding to someone.
Okay.
Yeah.
Cool. All right. So if we see the two lines cross for the Senku and we have a confirming trigger with the Chiku, we come to our stats. We have stats for overall, long side, and short side. The long trades and short trades are literally the flip side of this exact same thing going down. They just flip it over for this particular situation. But take a look at the big difference. Here are the long trades with a 1 ATR target. If you don't know what ATR is, it's the average true range. We don't do option analysis of volatility. We analyze the underlying ETF. That's telling us we use a 5-period ATR. So basically, how much is this ETF moving on average every 5 days, high to low? How many points? So that ATR, that measure of volatility, gives us how big our profit objective is. I'll go with the chart in a minute and I'll show you that. But it tells us if we expect a 1 ATR move for our target, 93% of the time, it will reach that magnitude move within one expiration cycle, within 2 expiration cycles. That's basically 2 months. For a 1.5 ATR move, 88% of the time, it reaches that target. With a 2 ATR move, 85% of the time, it reaches that target within 2 months, okay? If we go to the short side, it doesn't work out at all. All you're gonna do is lose money. There is no expectation of profitability on the short side with this strategy, with this ETF. But what people tend to do, oh, 2 lines crossed up, let's buy calls. 2 lines crossed down, let's buy puts. It'll work out once really well, and then next time you lose all the money you made before. The next time you lose all your money you made before. And then when it's all said and done, you're like, I didn't make any money at all. It just sort of like, it went up, went down. We eliminate, by doing these stats and maintaining what the numbers actually are, we eliminate all of the short side for this particular strategy with this ETF. We would not trade the Qs short with this strategy because all it was going to do is negate our profits, remain on the long side. So when I see a bearish crossover, I would not be taking that trade on the Qs because the statistics are not in our favor. Like they said in those Hunger Games movies, may the odds be in your favor. The odds are not in our favor taking short trades with this strategy on this ETF. Okay, they're extremely in our favor taking the long trades. So when these trades come up, you take the long trades. This is just not even a question mark. This is what you do. As long as you can afford it, it fits within your portfolio plans. And so we maintain these stats for each of those lists, for that whole list of ETFs, for all the different strategies we do. And I always recommend eventually you narrow down the list of ETFs you want to trade and just become an expert in certain ETFs, and then you'll see the profits just start magnifying because you so few losses. Although we have 28 ETFs, if you narrow down your list to maybe 5 to 8 ETFs, that's all you focus on, hot, up, down, trade them bullish and bearish. I mean, they just become an ATM machine for yourself. And you can probably get at least 5 or 6 different sectors you're trading up and down, get some of the major indices with either XLI, which is lower price version of DIA, or the Qs or SPY. And then you also get into real estate sector in there, a little gold, some metals in there with XME or GDX. Want to trade China with FXI. So an interest rate ETF with TLT. So you get a very diversified list of ETFs for yourself, and it just becomes an ATM machine. It just does, because you're always cash flowing every month. You will have your losing months, no big deal, it happens. But overall, it becomes really challenging to have a total losing month or losing year, as long as you're consistent with your trading, because of we maintain that 84 to 90-something% win rate. I'm gonna scroll down here to another one we always like to trade, XOP. Oil. Take a look on the stats once again, 1 ATR, 92% wins, 88. And always be aware, the bigger a move you expect, the less chance it's going to get there before being stopped out. So the smart move will actually make you the most money. Usually being conservative and going for the highest probability, which is a smaller move, and then lock in profit and then trail stops or remaining contracts. That's the smart move. I would never place a short trade with this strategy in XOP because the stats are too low. But you never know that unless you actually go through and find a history and review the history. Like when we do this, we went back to 1999 on the Qs, find every valid trade. And with every valid trade on a chart, what would happen if we had just bought calls that opened the next day? And would it have been a loss or not? Okay. And that's what we do for all of our strategies. We don't do automated back tests, we do it manually because we don't trust the charts. By looking, having your eyes on the charts, you know when a chart's actually wrong or right. Sometimes the chart's just plain or wrong. And it's like there's something going on here, and because it doesn't look right. And the only way you know that is from looking at charts so often, you can actually recognize when something isn't right. Charts have bad data. Every chart has bad data, and the broker will not fix it. You just have to know it's not right. And we brought it up to the broker a few times, and they're like, "Yep, they acknowledge the data's wrong, the chart's wrong, daily chart's wrong." That never happened, but it's on there, and it will stay there forever. So when people do back tests, you always have to factor in error. Charts are wrong, human error, so on and so forth. So if you're looking for 85%, give yourself several percentage of cushion just for error in the charts, error in humans. This error. All right. So always think about that also. The charts are not always right. Went through a lot of stuff so far. Do we have any questions so far on anything on the trading plan or the stats before I switch back to a chart? Went through a lot of information. All right. I want to give you a feel for what.
Just a quick question, Evie.
Yeah.
So how far in time do you go to buy the options? Like we are in the month of March.
Okay, let me
How
switch
much-
back
how
to the
mu-
chart.
Yeah.
Okay, so right now, we are here right now. If we were going to buy an option, it'd be 2 expirations, a minimum 2 expiration cycles. So we're in the cycle that ends on 4/15. So this doesn't count because we need 2 complete cycles. So that would be April doesn't count because it's not a complete cycle. We're already in the middle of one. So May and June. So June would be the earliest option. If we're going to do an option trade right now on something valid this past week, it'd be a June expiration. June expiration would be the earliest.
And you will buy June expiration 360 minimum or higher, just to keeping the delta between 50 and 55.
When you say 316, what do you mean by that?
Qs right now is 359.35. So
Yeah.
I'm assuming 50% is 360. So
Okay,
so in the money.
So the first in the money option is which strike? Based upon Friday's close, what would be the first in the money call option?
Should be 360.
No, that's out of the money.
Or should be 359.
Yeah, that would be based on Friday's close. That
Yeah.
would be the first out of the first in the money option would be 359, and I'd be looking at the June option chain. Third Friday. We only look at the third Friday. No other fancy options they've created in the last 15 years. The third Friday is the only expiration we look at, period. No other expiration other than the third Friday of the month. That's the one that's been around forever. Not all the ones they just manufacture every couple of years. Just the third Friday only.
And do you have any preference? When do you get in a position like the beginning of the day, towards the end of the day, or do you have a price target at which you would like to get in?
Okay, let's go back to the one we had set up. And someone pull out a calculator because we're going to need it. All right. Let's take a look at the same one that we looked at a little while ago. All right. On this day, we had the bullish cross confirmed, and the ATR on that day, 1 second. Okay. The ATR that day is 10, still off the chart. We need to hang on a second. Okay. On that day, we had to cross over in a valid trade. The ATR is, write this down, $8.53. Someone write down 853.
And what was the date?
853 on 12/2/21. That's the ATR value is $8.53 on 12/2/21.
And Q is at 385, 389.
Now it closed that day at 389.91.
Okay.
The next morning, we enter at the open price of the ETF or lower. So the next morning, it opened at 391.31. So we'd be looking at if you're getting in at the open or lower, you're looking at the 391 option. A couple hours later, you could have gotten in at 386. A couple hours later, you could have gotten in at 383. A day later, you could have gotten in at 380. It's the open price the next day or lower.
Mhm.
If you're getting lower, you're still getting in the first strike in the money. We don't buy other money options. If you're getting in after the market's dropped that day, if when you're looking at it, the market's at 385.32, you get into 385 strike option. Okay. Is the open price or lower? But our profit objective, initial profit objective, is based on the open price the next day. So the open that next day morning was $391.31. What is $391.31 added to the ATR from the previous day? Type it into the chat window. So the market opened the next morning at 391.31. What's 391.31 added to the ATR? Please type that in. And the ATR the previous day was 853. So what's that number? 400.44. 400.44, that is our first profit objective. So whenever during this day you actually bought your call options, okay, you might have gotten it right at the open. Once, if it goes above the open price, you're not buying it. You put a limit order maybe in to get in, but once we are at or below the open price of the ETF, you're going to be buying the at the money, excuse me, the one strike in the money call option expiring in June. It could be the 390 strike. It could be the 388 strike. It could be the 384 strike. You didn't get it the next morning because you were busy. You looked at it and you got in down here. It could be a 381 strike. Okay. Your target is 400.44. Which is right here, okay? It's the open price of the ETF added to the ATR from the previous day. And if you wanted, since you have the stats, maybe you want your target to be bigger at 1.5 times the ATR. See what I mean? Your target is based on the open price of the underlying ETF, not on the open price of the option. The open price of the option is in no way, shape, or form correlated to the open price of the ETF. The ETF will open at 6:30 a.m. Pacific time. The first option may not be traded for another 45 minutes. So the open price of the option is in no way correlated to the open price of the ETF. They're two completely separate, different things. So open price of the ETF or lower is the entry for the trade. So let's say you didn't, just so you even understand it, let's say you didn't get in you got in sometime during that day, but it was below the ETF, the open price, great. Now you could have a potentially bigger target. Let's say instead of getting in at the open, which is 391, you got in the next day at 381.
Hey, Evie.
So now your target is 10 point. Your target can be 10 points bigger than originally planned. Can be, if you're greedy, or you can find a target smaller, in between target. Yep. Question.
So the next day, which is on December 3rd, let's say we got next day. So we got into the trade 391.91.
Yep.
And then our first target is the 180R, which goes to 444.
Yep.
So that is a profit target. The loss target would also be same thing, right? The price at which we get in.
No, there is no
180R.
Did you say loss target?
The stop loss.
The stop loss is, there is no stop loss here. The stop loss is a percentage of your account. That's your stop loss.
Oh, so stop
You're
loss.
not putting in a hard, you're not arbitrarily,
whatever it is.
you're not arbitrarily deciding for the market what the stop loss is going to be. That's the benefit of doing this with options, because we don't ever have a hard value stop loss, at least up to the first target. After the first target is reached, yes, you will have a definitive stop loss value. But up until the first target, it can go 1,000 points against you. Who cares? That's the benefit of doing it with just calls and puts, because the market can go against you take big swings, and you don't get stopped out. So that's the big benefit of this type of trading. If you want to be exact and specific, then you trade futures. Our future strategy is actually 2 to 3 times, can be 2 to 3 times as profitable as the options, because we don't have the volatility and time decay, but we have the same win-loss percentage. So it's a whole different deal. But when you trade both at the same time, then you have the best of both worlds. Doing options and futures. So futures, some people really like options, some people really like futures, some people really like doing both. I see Jason on here. Jason, you've been doing both. What's your thought on each one? If you want to comment. Or can comment.
Can you hear me?
Yeah, Jason.
No, I love trading both. I love futures because there's more volatility. I like options because it gives you more time for the trade. So, you know, it just depends on what your risk level is. But it also means more work. You have to set up your trades right, and you certainly have to track things properly. But if you set everything up right at the beginning, then it's all automated.
Thank you. Yeah, Jason started several months back, and he's been doing both options and futures. And once you follow the plan, and we do have our futures and options group on Facebook that we can arrange access to. And on a quarterly basis, we update all the stats. Let me show you what the stats look like, just generally speaking. I'm going to switch charts right here to show you what you kind of will get. Stats. Let me click on that. Okay, share ETF stats. Okay, so this is kind of what the stats look like. So once again, here are the sectors we trade. It's one of the weekly chart strategies. There's 2 setups on it. What you see shaded in blue means it's 84% or higher in the win rate. This is one of the weekly swing strategy. And you will notice that this is the weekly strategies are great. I know there's some people who only do these because they don't want to spend time in a week. So all they do is the weekly strategies. It's another weekly option strategy. 10.5 buy. Once again, if it's under 84%, it'll be in white. Anything in blue is 84% or higher. These are daily chart strategies. You'll see it listed on the sheet, on the spreadsheet, T-line, and you'll see the stats for 1 expiration cycle or 2 expiration cycles. This is the win rate for 1 expiration cycle. This is the win rate for 2. I will never take this trade on EWG, this is Germany, with 1 expiration cycle. It's too low. You will pay a little bit more for the premium to get 2 expiration cycles. However, a big way we make money, a really, really huge way we make money is by not losing money. If you take a loss, it takes several trades to recover it. By not taking losses, we end up making a lot more money. And that's the benefit of having the stats available to you, is knowing what to trade. And let's take a look at this IYR alone. This is a REIT. The difference between 1 expiration cycle, which is 30 days, and having 60 days worth of time. That's a huge difference, okay? By not losing money, taking losses, we end up making a lot more money. So, but this is all the stats that Becky reviews every month and maintains, and we update this quarterly for the people subscribing to our group. And so the people who are in the group will be getting the stats and the updates that placed in the Facebook group every day. And so every day we place the trade candidates. So we do about 98% of the work for you each day to identify the candidates. Up to you to do the last 2% with the fine tune, go through every little line to verify everything, but we do about 98% of the work for you each day to identify the candidates for that particular day, for trades. As we go through, it's usually for the daily charts, it's 6 different strategies, long and short. And on the weekly, it's 5 different strategies, long and short. So we do that work for you every day, going through the 28 ETFs, narrowing it down, and then help you to the final 2% to just go through the ones that are candidates and decide what you want to trade that fits into your trading plan and financial situation and personality. Some people don't like to trade certain things for personal reasons. And it is funny how people do that, but literally they have a personal dislike for certain industries. So even if the stats are really good, they don't want to trade it. All right, going down a little bit more, T lines, buy, sell. This is the stats for it. So basically we have some trades that I've never had a loss. But until you start trading it, it's like, how can it be? Because it's technical. It's not about what we think. It's not about what we feel. It's not about our opinion. What we think, feel, opinions, we can talk about. You can discuss it in the Facebook page if you want. It's cool, but when it comes down to the actual money, our feelings, put that aside. Technical, objective, cold, business-like manner, you place and manage your trades and you make money. Not how you feel, not what you think, not what looks like, no feels like, pure technical. And usually when I go off plan, when I lose money, and losing money sucks, especially when that's my only real income, consistent income for the last couple of years. Can't do that. Got to stay on plan, and I know I'm going to make money. Scroll down some more. This is a D hook, Danshin, this is a Danshin hook. Once again, when you go after 2 expiration cycles, that's where the real money is made. If you go 1 expiration cycle, this is 80, this is, they're all really good, but the difference between 85 and 89%, you make a business decision, silver. You make a business decision if to go with less time, because you might have more losses, but nothing wrong with it. You're still going to end up making money, just that you might have some extra losses because the stats are going to be lower in most cases. Ichimoku hook. This is our one we use for market bottoms. Usually this, after a pullback, this will be the first one. Is an Ichimoku strategy that gives us a buy signal. We've had a couple of those this past week. I'm in a couple of those right now, actually. We had a few hooks. So I took a couple of hook trades this past week. I think it might have been XLB, might be one of the ones I'm in, or I think it might be XLB. I know at least on one of 2 of them. And this is the one for market tops. This one, when you hit it, and it starts dropping big time, because you get in a very market top before volatility picks up, so the puts are still really cheap. And when it starts to drop and drop and drop, that's when these puts explode in value, because you're getting in literally at the very market top with this strategy. All right, I'm going to switch back over to the plan. All right, does anyone have any questions so far? It's when you place the, I'm gonna go back to the chart just so you get an understanding of that again. So when we would have this trade here valid, we would place our order to buy the option. So let's say we bought 2 contracts. So we place the order, limit order, we look at what's going on, we get 2 contracts. Then we place the exit order. Let's say all we want to do is to get out a whole position at the first target. That's all we want to do, exit the whole thing at the first target. So what we do, we place a conditional sell order that says sell to close 2 contracts when the Qs goes above $400.44. Good till canceled. Walk away, go live our life. Nothing else to do. That's it. There's literally nothing else to do. And that would be, whether an 8-point target, an 850 target. If we'd gotten in this trade 10 points lower, which we could have done that same day, if we didn't get there right away, you don't always get there right. I am never at the computer in the morning at the open, never ever. I stopped doing that a long time ago. If I get there later on and see, hey, the market dropped, I could get in this trade down here, 10 points lower. So now instead of having an 8-point target that I had before, I can now have an 18 point target if I want to. Called being greedy. I want the whole thing. I could have gotten in up here at the open, but I'm getting in 10 points lower. So now I can get this 10 points plus this other 8 points. It's a choice you make, but that gives you a feel for how you're not locked into being there right at the open. And when I'm working with you, I'll show you how to set it up ahead of time anyway. You can set these trades up in the previous evening if you want to. You can set them up the next day. You know, this trade was still good over here because it hadn't reached until the first target's reached. You could have gotten in the trade 2 weeks later. No big deal. And these are some of the best trades you get in late. Most of my trades I get in late because I get bigger targets and much more profitability. So I don't stress over being there right at the open to get in. Some people want to get it done and great. I don't really stress over it. I look for the best opportunities, and since I'm trading the futures also, having to trade futures is really great in addition to the options. So doing both is really the best of both worlds. Any questions? So true. Okay. Any questions so far? Yep.
Just one more on the Ishimoku chart. So
Yep.
you took that the trade on December 2nd.
Yep.
When that chart actually just crossed over.
Yep.
From the red to green.
Say that again.
The chart crossed over from red to green. It was on December 2nd. That is why there was a signal to buy, signal to go long on Qs on
Yes.
December 3rd.
Yes.
I see. And then,
correct.
yeah. And
then
then
we
on
had the
Ishimoku, Ishimoku, you have got some other lines as well with the fastest, slowest lines and all. Do you also take into consideration those?
That's not part of this strategy.
Okay.
We use those on different strategies. We'll also use those on some future strategies also, but it's not part of this particular strategy. We have a group of Ichimoku strategies. We use the Kijun. The Kijun is our biggest one we use in multiple strategies. The Kijun is our favorite. It's a great trend indicator. Kijun we'll see on multiple ETF strategies and on future strategies. Tenkan we don't use as much. And the Senku we use on 2 major strategies for on the long and short side. But this one is a real good one to give us bigger targets than because it's usually a major change in trend. When you see a bullish cross with the confirmation, it's usually a major change in trend. And we get some really nice moves off it. And having the options, we can survive these swings, because to get to here, you got to go down here. If we're trading this with futures, you'd be stopped out already. But if you're doing it with options, you can survive the swings and still make some really nice money. You don't know what the return is going to be, but it's going to be somewhere between 3% and 30-something% return at the first target. To get more, you have to trail stops or remaining contracts to get more. And if you email me later, I can send you a spreadsheet someone put together several years ago with his real trades. He actually put his real trades on here. He shared his real trades for about 7 or 8 months with the group. He was so proud of it. There's a video online of him doing it also. But he did these strategies for, and when you're consistent, I'm gonna go to the spreadsheet real quick here. I'll show you what, and this spreadsheet is online, so you can access it. Here, so right now I'm showing you the 2021 trades. The 2022 is on here, it's online also. Here are the trades through the end of, through expiration in February. Becky updates this at the end of each month. So next weekend, she will update it for March expirations. I know we had a couple of losses in March, but the first 2 months, this is what anyone who doesn't have an account, options account that looks pretty much like this with these trades. Like if you had a whole bunch of losses of trades expiring in January or February, there's something wrong. You might have a couple depending on some choices you make, but it shouldn't be that much different than what you see here with win-loss status. That's why we put this out every month, so people can compare their trades to what we're seeing. And we'll post this in the Facebook group. So, and I said, people will be given an opportunity if they want to join that group. You just have to let me know. And then we can set that up for you. And let's see, go back to 2021. And we see we don't get that many losses. Realistically, we average about 87% wins. You can't be in every trade. That's absurd. No way you can do it. Because just because you get a buy signal on something doesn't mean it's an ideal trade to take with an option. There's still a lot of variables with options. So that's why I work with people to identify the best opportunities, make decisions, narrow it down. But this is what it looks like. It's just a very nice, consistent record of wins, because we maintain 87% wins if you follow the plan. So I'm going to go back to the handout real quick here and sort of wrapping it up. We always go kind of long. It just sort of happens. But like I said, we'll spend, when we do work with people one-on-one to learn these strategies, the group of strategies, the daily chart and or weekly, we'll spend 3 hours as a trade management and going through different situations. And then I will literally, if you need me to, I'll be online with you. I've actually sat in person with people placing their first live trades. We even get an account set up. So I work with everyone on one-on-one. So I don't do this big group thing. One-on-one, focused on you and your specifics. Some people have small accounts, some have big accounts, and everyone has different personalities, so, and comfort level. So that's what I do. If you want to work with me, I have 3 programs for the daily chart option strategies. It's actually more than 5. It's actually 6 strategies, long and short. And this details everything, but we'll get all the trading plans. And if you want access to the Facebook group, we'll talk about that. That's available. And then we can also update the stats every several months. That's available to you also. If you want to maintain stats yourself, that's okay. Some people don't need them, but it'd be good to have the updated data every couple of months. And it's really, really smart if we arrange to do a monthly review of your trades. What has happened is that people go back from look at their trades months and months ago, they had losses and they were afraid to tell me about it. Or they didn't realize it, they just thought they were just losses. And then we could look back at them and they should have been wins. The losses should have been wins. And there was no way to go back several months and figure out what really happened. Why were your trades that should have been obvious wins, why were there losses? It could have been the broker made an error. It could have been you made an error, but we talked to the broker and they only keep your trade records as far as what you typed in for your order form for about 30 days. Otherwise, there's too much information. So if you typed in the wrong order, the wrong information in your order form, they can look back 30 days and see what you actually typed into your order form and if it was right or not. Or if it was their error, they'll fix it. I have had the broker go back and take losses I had and credit me money plus profit that I would have had because something on their end messed up. But we need to look at that in a timely manner each month to make sure your losses are all valid losses, because you get screwed sometimes. You don't even realize it because you're over trading. You got so many things in your account. You're not focused business. You got to look at your business records every month, make sure that what you're doing is correct and you're not being screwed by mistakes or a broker with having errors on their platform. It happens. We just don't even realize it. But that's $17.50. If you're on the meetup today, if you let me know before this week is over, I'll take $100 off this to make it $16.50. That's just for the daily chart option strategies. If you want to do the complete option program, that's a daily chart, weekly chart, and the market internals, which was a totally different approach with using market sentiment for call options. So you're going to do the weekly chart strategies and the market internals and the daily, which is basically a lot of information, but it'll give you a lot of choices. Then that's $39.95. If you let me know before the end of the week, I will take $400 off of this price. Let me know by the end of the week, I'll take $400 off the $39.95. Okay, $400 off of that price before the end of the week. And if you want to do the daily chart options and futures, which is the one I actually really recommend, is the most effective, that's the best one, then futures by themselves 1745 and the 1750 for the options. If you let me know by the end of the week, I will take 400 off of this price for futures and options. You learn one at a time. I recommend learning the futures first, options second. Unless you already have an options background, then just enhance the options, then we jump into the futures later on. So those are the 3 programs I can work with you. It's all one-on-one. I do it either in person. I usually meet people in Santa Clara. I have a couple locations I can meet people in Santa Clara, real nice, comfortable locations at the university, or we can do it via Zoom. I'm pretty available for people who want to meet with me, talk to me. If you got questions, you email me, call me. And if you want access to the group Facebook page where I place the trades, let me know and we can set that up. And other than that, we'll probably do our next meetup in about maybe 3 or 4 weeks, probably on futures. But right now, do we have any questions on anything whatsoever? Want to take a look at anything in particular? Any charts for anything you want to take a look at, even one of the different strategies besides the Ichimoku, if you want to take a look at something?
Yeah, if you can take a look on NVIDIA and AMD, or maybe Tesla if you have to.
What's the symbol?
NVIDIA, NVDA.
NVIDIA. I also teach classes there. I teach fitness classes, and NVIDIA is one of them, places I teach. I'm going to actually change this to the Donchian. Donchian trigger lines. NVDA. So I'll let you know, I don't do, when it comes to stocks,
We can
how we do stocks is we don't trade stocks.
We don't see on the screen. We see only options.
Okay, I'm still on the thing. Okay, hang on a second. Let me switch that. Okay. So when it comes to stocks, we look at the sector first. So we do not take any buy or sell signals off a stock chart. We look at the sector. NVIDIA is tech. If the weekly chart of the tech sector / Qs, NASDAQ, is in what, if the weekly chart meets our criteria for a bullish upside breakout, we will trade the stock long. But we will never ever look at a stock chart on a daily chart by itself and make a decision. We will only trade a stock long if its sector is in a bigger time frame bullish breakout. By doing that over the years, we've had literally 90% of our stock trades be profitable, maybe even higher. When we did seasonality, doing it that way, I'm not even sure we had any losses. I'm not sure Becky has had a loss doing seasonality, because seasonal trades, because we use the sector first to look at stuff. So we will never look at any stocks unless the sector is also in a bullish breakout on a weekly chart. So I can't tell you any commentary specifically on this stock without looking at the weekly chart sector. And then I can say, hey, sector's in a bullish breakout long, nice trade. Otherwise, this could be very short-lived. We have a nice bullish breakout. If this was an ETF, it's a bullish breakout here. I'll let you know, most of the sectors are in a bullish breakout. Just so you know. I'm just saying. So right now, I'll let you know, as of last weekend, most sectors are in a bullish breakout. So on the long side, I would say, based on the sector being in a bullish breakout, this might have a little more upside potential for the right now in NVIDIA. It's interesting because I don't deal with individual stocks, because It's just easier and more predictable to deal with sectors and ETFs because no one stock is going to impact everything. It's just easy to trade. I had a question about IWM.
How do you identify the sector, which sector NVIDIA will fall? Is like NASDAQ?
That would be NASDAQ, but there is a website. Email me later, I'll send you to the website, and it will actually show you the subsector, not just the big picture sector, because they're thinking like 8 major sectors. They will actually show you the subsector.
Okay.
And we actually look up the subsector industry. You know, and that's how we trade stock. We look up the actual subsector that particular stock is in, that company's in. So what's your question about IWM, Olga? We had a breakout, excuse me, a Donchian cross a couple of days ago, long, and it's on its way. Right now, we had the Donchian crossover buy on 322, and that's a long trade. And we had multiple long trades on everything, Olga. Keygen isn't applicable to anything we're doing right now on any of these because if we look at, so right now, Keygen is only one strategy out of a group, and that's not telling us anything meaningful right now on something, but let's take a look at the Keygen on IWM. I know we had several signals on it. So Ichimoku grid and IWM with Ichimoku. There's nothing telling us anything using the Ichimoku chart right now. That's why we don't rely on one strategy to tell us anything. It's on its way up, and the problem once it closes above, something might happen, but we're seeing information we can actually use right now is showing up on the Donchian, which is the primary thing we trade with. And the Donchian for IWM, we got a buy signal earlier this week or last week and went down for a day, and now it's on its way up. So IWM is long for our daily charts, and SPY for our daily charts is, we had a Keygen buy on that too. And we are heading upward basically because we had weekly buys and daily chart buys. So everything is, right now, everything is long for the short term, at least through maybe this week, but then we'll see what happens after that. But right now, everything is long until we get a sell signal. Until we get a sell signal, our long trades are in play. When we get our sell signal, short trades are in play. That's it. All right, so any more questions? All right, so we're gonna go ahead and wrap it up. If anyone is interested in working with me on all the different strategies, like I said, what you saw on the spreadsheet is what we teach you how to do. It's for the daily chart, it's six strategies, long and short. And that gives you a boatload of potential trades each week, each month, a lot of potential trades. And it's something for everyone to fit into everyone's budget and personality. And budget is key because you can't always afford to buy a $2,000 call option on something. And that's with stocks. With stocks is really, can't do it. For most humans who would trade, there's a small percentage of people with huge accounts that can do that. But realistically, most average traders are going to have under 100 grand trading account. So you just can't take such big trades with just buying calls and puts because you're going to get screwed big time on time decay. All right, so I'm going ahead and call it a day, and I'm going to go watch some basketball right now. All I do is turn my eye to that way, and the game's on right there. Now I'm turning it back to you. So we'll go ahead and wrap it up. And if you want to work with me on coaching, the details are in the handout and on the website, along with all the stats for every trade for the last couple of years. And we track all the trades going back to 1999. So all of our stats date back to 1999 and on for all the ETFs whenever they were created, but everything from 1999 on for that got created since then, that's what we have. So all the stats are based on that. So that's how we maintain it every month, every quarter, and that's how we know what to trade, when to trade, and how we make money. All right. Till next time, guys.